Welcome back to the Market Manual, where we simplify trading and give you the tools to master the markets. In today's video, we're breaking down the Quasimodo level, also known as QML. This video is brought to you in collaboration with XMS, the broker known for speed and reliability, and Equity Edge, the platform that helps traders scale their capital. Disclaimer: trading involves risk. Past performance does not guarantee future results. This content is for educational purposes only. So let us begin, guys. QML stands for Quasimodo level. A Quasimodo is a reversal pattern in the market which is used to take reversals. Whenever the market is changing direction, it usually forms a QM, a Quasimodo. So, for example, as this diagram shows that price was in a bullish trend, making higher highs, higher highs, higher highs, higher highs. However, after failing to create a new higher high, it broke the structure and created a lower low. Broke these two structures and created a lower low. And then it came back to retest and form a lower high. After forming a lower high, it then dropped. So this pattern right here, this setup, is called a Quasimodo QM. And this level here, it's called a QML level, a QML Quasimodo level. So how do you see a Quasimodo level? As you can see over here, that a QM is identified by the following. This is how you identify it. You need to have a high and a higher high and a higher low over here. And price will then fail to form a new higher high and then break structure over here, break this higher low over here, creating a new lower low. After that, price then retraces back to this level over here. This level over here, and then drops. So this level over here, we have a left shoulder, meaning that you need to have a left shoulder and wait for price to form a right shoulder. We enter at that right shoulder. However, it has to break structure and then form the right shoulder. After forming that right shoulder, that's where our orders are filled and then price drops. So we need to have an over and an under. Over and an under. We need to have a right shoulder. We need to have a high. We need to have a higher high. We need to have a higher low. We need to have a lower low. We also need to have a what? Break of structure. And then also we need to have a base over here. This base is the one that broke the structure. This base is our MPL. So our QML level is this one. This level over here on the left shoulder. On the left shoulder. So why do we place our entries on this left shoulder? This because this is where there is a lot of liquidity. This is where the big banks and the hedge funds usually leave some of their orders. So there is a lot of liquidity in this area. So price will then come back in this area and then drop. Yes. And then this is our decision point where price comes and reverses. This is a QM. This is how we identify a QM. So let's go into the charts so that you can see a QM. Let's go to the chart so that you can identify a QM. Okay, this is a QL. Yes, that's not a clear one. Here's a clear one. Okay. As you can see, price from the high, higher high, higher high, higher high, higher high, higher high, higher high, and it broke this higher low, the structure over here, as you can see, and also the structure over here. And then we also have a left shoulder. We also have a left shoulder, and then we have a higher high, a high, and a higher high. This is our over, higher low, and a lower low. This is our under. And then this is our base. As you can see, it's a bearish engulf. It's a bearish engulf. As you can see, price just tapped here and dropped. Tapped here and dropped. This is our QML level over here. Let's label this thing because it's important to label. This is our QML level. High, high. And this is a decision point type 3, E type 3. And then we have a break of structure over here. As you can see, our price reversed in this area and then came back here. So that's 3. It hits our TP. Let's go to the north and much. Let's go. Here. Okay, here's the clear one. It's a buy setup. Here's the clear one. Right here. Break of structure. Over here you can see left shoulder, a lower low, broke structure, QML level. There's a lot of liquidity here. Came back, tested the zone and pushed up. And we could have placed our TP, our stop loss over here, and TP here on the zone over here. But to be on the safe side, it's best to place it over here. And this would have been 90 pips, 01 pips, 1:3, 1:3, correct, 1:3. Mm, Here's another example over here. We have a high and a higher high. Break of structure, high, higher high, left shoulder, break of structure, and this is a bearish engulf type 3. You see what happened? Price came back here, pushed up, placed our stop loss over here, over here. But it's safe to place it here. Okay. Could have gotten maybe 1 to 2 here. Another one is over here. Another one is over here. A high, a higher high, left shoulder, break of structure, a bearish engulf, although it was not fresh. Price came back, tested, and dropped. We only take fresh uh, bearish engulf as entries, not a bearish engulf that has been tested. This one, we could have left this trade because this area has been tested. It's not a fresh area. We only take fresh areas. Another example, guys. Here's another example over here. Film 11. break of structure, a low, a lower low. Here's our entry over here, a bullish engulf type 3, and you can see let's just tap here and push to the upside, and push to the upside. Let's look at one last example. One last example. Okay, something here. Something here. The break of structure here, as you can see. There is a QML level over here. There's a high, there's a high. There's a break of structure. We have a bearish engulf type 3 with a lot of liquidity. However, it failed to take or trigger or fill our orders over here just by a few pips. That's why it's usually best to, when your level is like this, to place your orders here. Always place your orders with the shadow or wick. Just place your orders here, your TP, your stop loss, maybe here, and then your TP around this area, the last low, or you can place your TP in the next fresh demand area, which is around this area over here. This was the last fresh demand area. This one here, because this is where price reversed. Yeah, or maybe here, this is another fresh area. This is another fresh area. You've taken this. This is your entry, stop loss, take profits. I'm sure this is the 1:4 or 1:5, or maybe, or even a 1:3. But it's a solid up. So that's it from us, guys. Please don't forget to like, subscribe, and also leave a comment. And don't forget, if you're looking for a broker, a reliable broker, use the link on my bio. And also, if you're looking for a reliable prop firm in order to scale, or maybe you're having capital issues and you're a profitable trader, please use the link on my bio to sign up for a prop firm. Till next time, guys.